Hello everyone, welcome back to the channel. Today, we are breaking down a massive update that could change the landscape of the Indian power sector for the next 2 decades. The government has just released the draft National Electricity Policy 2026. This isn't just a regular update. It is a strategic blueprint aligned with the Viksit Bharat at 2047 vision. If you are an investor in power, infrastructure, or green energy stocks, you need to pay close attention because the revenue models of these companies are about to shift significantly. The key pillars of the policy. Let's look at the 4 biggest takeaways from this draft. Aggressive consumption targets. The Power Ministry aims to double per capita electricity consumption to 2,000 kWh by 2030 and a massive 4,000 kWh by 2047. This means the demand for power is set to explode. Nuclear energy revolution. The government is targeting 100 GW of nuclear energy by 2047. They are specifically encouraging the private sector to build Bharat small reactors and modular reactors. This is a huge shift from the previous government-only approach. Financial discipline. The no free lunch rule. This is the most important part for the stock market. The policy states that subsidies must be paid in advance and cross-subsidies must be reduced. Most importantly, power purchase cost increases will now be automatically passed through to consumers every month. Efficiency. State governments must target single-digit AT and C losses and enable private investment in transmission and distribution. Stock market impact and sector winners. So, how do we play this as investors? Generation giants. With massive consumption targets, companies like NTPC and Tata Power are looking at a long-term growth runway. The nuclear entry. Since the private sector is being invited into nuclear energy, keep a close eye on L&T, Larsen and Toubro, for engineering and BHEL for equipment. Transmission and distribution. The push for private investment in transmission opens doors for power grid and Adani energy solutions. The financiers. To fund this massive expansion, companies will need capital. This makes PFC, Power Finance Corporation, and REC Limited very relevant as their loan books could see significant expansion. The automatic pass-through of costs is a game changer because it ensures that these companies don't get stuck with massive debts, regulatory assets, on their balance sheets. Conclusion and summary. In summary, the draft National Electricity Policy 2026 aims to make the Indian power sector financially viable, private sector friendly, and nuclear heavy. While this is still a draft, it clearly shows the government's intent to professionalize the sector. If you hold power stocks, the hidden risks of state-run distribution losses are finally being addressed. However, always remember to check the valuations before jumping in. What do you think? Will these reforms finally fix our discoms? Drop your thoughts in the comments below. Don't forget to like and subscribe for more deep dives into market-moving news.